for startups and women-led businesses. I'm so excited. My name is Shumway Marshall with Business Forward, and I'm so excited to have with us today Carla Harris, as well as Kim Peyser and Pravina Raghavan from the Small Business Administration. For those of you who are not familiar with Business Forward, we are a Washington-based organization whose goal is to help business leaders advise Washington on how to generate jobs and accelerate the nation's economy. Carla Harris joins us today. She is the chair of the National Women's Business Council and vice chairman of the Wealth Management at Morgan Stanley. She is also was named Fortune magazine's list of 50 most powerful Black executives in corporate America. She was named to Essence magazine's list of 50 women who are shaping the world, and Black Enterprise magazine's 50 most powerful women in business. And she's also the author of Expect to Win, 10 proven strategies for thriving in the workplace. We are, just a reminder that there will be a time for questions at the end of the presentations. And if you'd like to ask a question, please use the chat window. I'll have a little reminder here throughout, so that it is. And without further ado, thank you so much for joining us, Carla.
Thank you so much, Shumway. It's really a pleasure to be here, and to all of you for being on this important call. We could not be at the National Women's Council. The key barriers to entrepreneurs, and that's access to capital. That still remains today in 2014 a major challenge, but it's certainly something that collectively between the National Women's Council organizations and the SBA, we are focused on and are going to try to make a big difference on this front over the next few years. And I think crowdfunding is one of the mechanisms that will allow us to make a significant impact around the access to capital. Access to capital has really been an issue because of the access, particularly to equity capital sources. In order to get access to equity capital, particularly for small entrepreneurs and women entrepreneurs, it's about having access to network, then access to the community that was interested in investing in early-stage companies. With crowdfunding, we think that there is an opportunity because it creates transparency between the investment community and the entrepreneurial community around great ideas that can be funded. And we think that this could, in fact, level the playing field when it comes to early-stage investing for emerging and current entrepreneurs. Indiegogo, a popular crowdfunding platform, has already indicated that 42% of its crowdfunding campaigns have been run by women, and in fact, women are raising more money than any other demographic in terms of the number of contributions and the amount of money. And again, we think crowdfunding will raise the awareness and the visibility around these great entrepreneurs, will give them an opportunity to get to market faster, and will also give them an opportunity to commercialize and scale at a faster rate than they ever have before. We're also excited about this time in history because we think that this is frankly a perfect storm for women entrepreneurs. We are in an environment that has low interest rates, which means that entrepreneurial investment opportunities are on a relative basis far more attractive to the investment community. There are a lot of great ideas that are out there. There are more women who are getting graduate degrees and who have an appetite, frankly, for risk and for entrepreneurialism. So we think that given the economic environment, given the transparency that crowdfunding offers, given the investment community's appetite for transparency, this is a conversation that has a certain amount of intensity, if you will, and a certain amount of interest at this time. The other reason that it's important in our minds is that all of the data that we have produced at NWBC has shown that capitalization is a key issue for sustainability, especially for women entrepreneurs. Our data also says that women start their businesses with lower amounts of capital, startup capital, and rely heavily on personal savings to start a business. So obviously having access to capital through crowdfunding would certainly create a mechanism for further sustainability for these businesses. The data demonstrates that male-owned businesses have more capital at the start than women-owned businesses, which could explain why male-owned businesses generally generate higher revenue than female-owned businesses. We think crowdfunding also gives access to funders outside of the typical VC networks. And again, some might call this democratization of the funding process, and frankly, yeah, I would agree. At the National Women's Business Council, we are advocating for increased access to various types of capital for women-owned small businesses. We are also raising visibility around the conversation around microfinance organizations such as Bad Girl Ventures, Sumo Land, and many other organizations who are focused on microfinance as another source of capital for these businesses. Women entrepreneurs are very, very important to job creation in this country, and it's been one of the fastest growing segments of entrepreneurs in the that we've all endured. We're also raising the level of visibility around women's participation in incubators and accelerators, and we are working closely with the SBA to ensure programming that effectively addresses women's business owners and access to capital through these vehicles as well as the traditional vehicles. And with that, again, I'll say we are a part of this conversation. Turn it over to my colleagues at the SBA, Kim Peyser, the Special Advisor to the Associate Administrator, and Pravina Raghavan, the Deputy Administrator.
Thanks, Carla. In the Office of Investment and Innovation, where we've been doing a lot of thinking about this crowdfunding piece. We're going to start today as we dive into this by looking at the Jobs Act to start with at the sort of 35,000-foot level. The Jobs Act, generally speaking, was passed by the president in 2012 with the overarching goal being to increase access to capital for startups. Sorry, we're just getting the webinar moving here. Okay, well, we'll work on getting the presentation up, but I'll begin talking through the content here. So as I said, the goal of the Jobs Act, as the president signed it in April of 2012, was particularly aimed at increasing access to capital for startups. It had in it 7 different titles. Usually, as you hear people begin talking about the Jobs Act, they are talking about Titles 2 and 3. Title 2 was specifically about generally this access to capital for small businesses and their job creation. Title 3, and that one has already gone into effect, did so in September. Title 3 is the one we're focusing on today, which is about crowdfunding. And the rules are not final on this one yet. They're still pending. They were proposed by the SEC a few months ago, and we're still waiting for them to be finalized. Title 7 is also interested, and is actually sort of part of what we're doing today, which is activities, which you'll be seeing more of. So to get into Title 3, which is on crowdfunding and our focus today, the main purpose of this one was to create a series of exemptions so that some small public see. Crowdfunding and look ahead to where certainly not that are frankly an opportunity puts their business idea online. That's sort of just being able to put it on a web platform in that way allows for the word to get out about what their company is doing. Again, Carla set the stage for us here, but just to sort of reiterate some of her points and hit on some other interesting data points. The focus of our conversation today is on why crowdfunding is particularly useful or of note for women, and why women small business owners should be paying attention to this. Some interesting data points here: 19% of leadership positions on Wall Street are held by women. Only 11% of firms with venture capital backing have been founded or led by women. Male entrepreneurs are more likely to get funding based on their pitches. That comes out of a new MIT study, which is interesting. So there are a lot of things going on here in the world of investing and trying to get private equity that sort of lead us to the belief that crowdfunding is uniquely well suited, especially well suited for women. This just gives a brief overview of how crowdfunding would generally work, if this is a new sort of idea to anyone on the line here. So the company would go onto one of these portals or platforms, which Pravina will talk about a little bit more later, and a company will create their online profile, and they highlight at that point the precise fundraising goal, what they're trying to raise for their company. The platform itself will do some kind of background check on their own to make sure, obviously that the company raising is legitimate and so forth. Again, that will be a little bit addressed in the new rules that have been proposed. And then the startup can begin raising via the crowdfunding platform. And once they reach their goal, the funds would be transferred over to the company. Again, in the previous format, usually people contributing on a crowdfunding platform to a company, they would not be getting equity in the company. They would be getting some other kind of reward, or just be doing it because they want to donate to that idea. To briefly touch upon some of the other platforms out there, as you see, we've mentioned Kickstarter and Indiegogo. These are, generally speaking, the most popular, that get the most traffic. You can see some others listed here. I'm going to blow through these to move on, but you'll be able to see the decks after the presentation. And there's a couple more to see here. They all have slightly different models, which you can see described in the key. So there's R, which is for rewards-based, D, which is for donation-based, meaning you're just making a straight donation to the company. E is for equity-based. Again, there aren't as many of those in existence yet. That will be coming when the rules are final. And L would be for lending-based, when you're making a loan to the company or the idea. I'm now going to pass it over to my colleague Pravina, who is going to talk some more about the specifics of the new rules.
Thanks, Kim. So just to get everyone level set, the Jobs Act had several titles, and so the one where we're going to focus on is in your middle column, which is retail crowdfunding, which is Title III. So sometimes people call it Title III, call it retail crowdfunding, and really what it is looking at not being an accredited investor, which is the accredited crowdfunding, which currently people can do today. You can fund small businesses through accredited funding, but retail crowdfunding, as been said before, really democratizes the ability to get cash from just the general public into companies. So we're really going to be looking at that, and as you can see, it tells you the type of, in case you're wondering where the regulation is, you can see it Regulation CF, and it's looking to do about $1 million is the maximum offering amount that small businesses could partake in it. So just to give just a level set, in October 2013, the SEC pulled out their proposed rules for Title III as part of the Jobs Act. Just so you know, the comment period closed in February. They are currently reviewing the comments, and they have some time now to go through that and really look at what they're working on. And then once they've come out with the final rules, those will be the rules in effect. So as of now, you can't do pure equity crowdfunding from unaccredited investors. You can still do it under accredited investors, but what we're talking about is the future of crowdfunding. It's not yet there. The SEC Securities Act of 1933 is what looks at doing equity financing towards companies, and really what the new SEC proposed rules are is taking platforms. What they want to do is use websites or platforms which the companies will be using. They'll register with those platforms, and that's the way the crowdfunding would happen, through these registered portals or platforms. And only those registered portals or platforms would be able to allow companies to list and crowdfund. For an investor, currently today, if you are an accredited investor, and accredited means that you have an income of more than $200K and your net worth is greater than $1 million, you can already participate in in equity financing. So you could go and invest money into small businesses. What crowdfunding allows to do is allow investors who don't make more than $200K, so if you make less than $100K, you can give $2,000 up to 5% of your annual income or net worth to a business. And investors who have greater than $100K can either give 10% of their annual income or net worth, and then they can only, during that 12-month period, and this is a rolling 12-month period, not be able to purchase more than $100K of securities through crowdfunding. So if you're even if you hit that, the most you can ever purchase is $100K. For startups, generally what will happen is they can now raise up to $1 million in a 12-month period. Before, startups couldn't go just to the general public and ask for equity crowdfunding, and now they will be able to do that. So what does that mean? So, you know, there's some proposed rules, and what is the SEC looking at? In the proposed rules that the SEC has put out, one of the things is disclosures by companies, and we're telling companies now to start thinking about this, especially if you plan to go and take advantage of crowdfunding when it becomes permanent and the rules are finalized. They're going to be looking at targeted details of the company, including information about the officers and directors as well as owners of 20% or more of the company. They're going to be looking at your tax returns. So I would say if you are a director of the company, you would have to get those into process. They're going to be looking at financial statements of the last 12 months of the company itself and the audited tax returns of the company's returns. So if you don't get your returns audited at the current moment for your company, it is something that you'd want to think about, because they'll be looking at the rolling 12 months prior to that. They'll also be looking at just generally, what is the company, what does it do, and what are you planning to do with the proceeds? Almost similar to as if you walked in anywhere and said, I wanted some money, someone's going to ask you the basic questions of what is your offering, what makes you unique, and why should I invest in you? So you'll have to be able to answer those questions and really prepare for a bunch of people to look through a platform and a portfolio, because you will not be able to actually have investor meetings on the platform. It'll be your solicitation up there on a platform that is regulated by the SEC, or actually regulated by FINRA. The crowdfunding platform, as we keep talking about, is going to provide educational materials to investors. They're going to be trying to take some of the risk and fraud out of it by looking at both from a small business perspective, are you a legitimate business? Is it a real viable, real equity offering? And then also doing some of the background checks on some of the investors coming in as well. They'll be providing comments, providing the offerings available to the issuers. They cannot give advice, so they will not be able to say, pick this security over another. All they're going to be able to do is lay out all the securities, and the investor themselves will have to make the choice. And they can't really solicit purchases, or when I mean solicit, go out and actually market, as opposed to just putting up the platform up themselves. There's also going to be restrictions on how the platforms work and in soliciting people, and how they compensate people for putting equities on their platform. And once again, these are all proposed. They're not yet finalized, and the SEC is working on it. So the SEC, as I said, got their comments in February. It'll be 90 to 120 days that they have to review those comments. So we're right now in the process of them looking at that. And then they have to go and get it reviewed by several agencies, and then they'll put it out for, it'll be the final proposed rules. We're expecting that to happen. In this presentation, it says 9 months. It's probably going to be a year, so you're probably looking in 2015 when the new crowdfunding rules will go in effect. The platforms themselves have not been selected. FINRA, which is the Financial Industry Regulatory Authority, is going to be responsible for monitoring and making sure that those platforms are in compliance with the SEC rules. They haven't put out their rules. They probably won't be doing that until the final rules from the SEC are out there. As I said, fraud protection is a big on both sides. Both the companies, we want to make sure we're protecting them against fraud, but we also want to make sure the investors are also protected from fraud. So a lot of the platforms are going to be looked at to help really look at those companies as well as those investors and make sure that fraud does not happen. And then IP protection is something that we at the SBA are working with, like the USP, to really figure out an idea of how are we going to protect small businesses' IP if it's out on a website where people can look and just make investment decisions. So what are we doing? We're working with the SEC. We are on their board of advisors looking at both the cost for small businesses going into crowdfunding and also what are the requirements. We want to make it as less burdensome as possible for small businesses, but also keeping in mind that we want to protect them from fraud as well as the investors going in. So what we've been doing is working with our, we have a very large field offices as well as our small business development centers, women's business centers, and SCORE, and working with them to present what is crowdfunding, what should businesses be looking for, but then also when these rules become finalized, where can businesses go to get advice and also help them figure out what platforms and where to go. So we are having constantly educational series similar to what we're having today. And then we'll be connecting accelerators and crowdfunding platforms. We're working with both of those to find out what's going to work in this new market to be able to give some more guidance to both the SEC on when they're looking at these platforms, and also making, as we said, not burdensome in cost to the small businesses, which is very important to us. We are identifying best practices so that they could be used across to help make policy when it comes towards what is crowdfunding. And then, like I said, we're working with the Patent Office to make sure that we're looking at intellectual property protection. We are continuously going to be having webinars on these subjects because it is important for small businesses to be interested in crowdfunding without participation. We already have a small learning center, which is funding, but also some of the we discussed, which is a business plans, presentations, as well as financial statements. We also have educational models and classes to help small businesses go through that. And then also looking to make sure that small businesses are aware of equity model and loans have a different perspective than equity model means that you're going to be giving some of your business up to a third party. You're going to be giving shares. We also have other financing available through the SBA, not only our loan programs, but our SBIR, Small Business Innovation Research Program, and our SBIR Research and Development small businesses, and give them non-dilutive funding, meaning you don't have to give any people able to financing. If you're interested in that, that's available today. So I'm going to turn it back to Shumway for questions.
Great. Thank you so much. Again, if anyone has questions either for Carla, Kim, or Pravina, please type the question into the message box, into the chat window. Or you could also email info@businessfwd.org. So you mentioned a couple ways that businesses can really take advantage of crowdfunding once the rules become final in 2015. Could you, Kim or Pravina, just review a little bit about, that is, sometime next year. What should businesses who are interested in taking interest, or who are interested in crowdfunding, what should they be doing now to prepare for when those rules get released?
So one of the things I would say is to make sure that they're looking at both the way their financials of their company look today. People will be looking at the history, and then also being prepared that they will be to put audited financial statements out onto this platform. And while they're doing that, they should probably be thinking about what is their offer, what makes them unique that someone would want to put money into that company, and really think about how they plan to use those proceeds in a way that anyone who's just trolling on the internet would be able to say, yep, that I want to invest my money in that company because it does that. So really looking at your company and saying, what is the uniqueness that I have that will be able to make me raise $1 million from the public? Now, it's up to $1 million. You could be raising $100,000 as well. And really trying to figure out a way to artfully articulate that, because you will be limited in the sense that it will be on a portal. So it isn't that you can have video conversations and interact. It will be limited to a portal where they will be putting your information saying this is the company, this is the description, and this is what they look at. So really packaging your business to attract investors is what I would tell people now, and working with your advisors as well as some of our resource partners to try to make sure you're understanding what message you're trying to get out there.
Thanks. Just following up on that, Rob asked, when we're looking for investors and partners, do you have any specific tips of, other than our message that that business leaders should really be looking for, as they are putting together and considering crowdfunding?
I think.
And is there a specific type of investor that they should try to be courting?
No, so the beauty of retail crowdfunding is that anybody could be a funder. So if you're looking for a specific set, sometimes if you're interested now, you could do that through accredited investors. But I would say you probably want to make sure you understand the target that would invest in your business. If you think, I think right now if you look at Kickstarter and Indiegogo, even though it's open to the public, you're kind of mining where you're going and who you're looking for. So the beauty of it is it's open to everyone. That means that you have a huge market. So if there are particular types of people who invest in your industry, you could start doing research now, looking to see where angels and VCs put their money if it's in your industry, and trying to cultivate a pitch book for them. But the beauty of this is it is open. So you could get someone who may not fit your perfect mold, may be the perfect investor for you.
Yeah. And a reminder to everyone, this presentation will be available and emailed to you after the call for those that are interested in reviewing it. I know that Kim and Pravina and Carla as well covered a lot of material very quickly, so you don't have to worry too much about scribbling all those notes furiously. Question from Tammy. What should a new company do if they do not have financial statements available since it's a true startup?
So the first thing is most likely people will be looking into the individuals and the founders and directors, anybody over 20%, looking at their financials. So you'll have to get those prepared. But then I would say your business plan is going to be what people are going to fund. So you really need to look at the numbers in that business plan and the assumptions that go out there and saying, how do you plan to get investors? So people are willing to take a chance, but they've got to make sure that they're realistic and understanding your business and value proposition. So it would be like marketing a new product, and in a way you have a new business. So it's similar to that product marketing that you would have to go and say, here's the unique selling points, and this is why this is going to return you money.
And I guess the question from Denise, as part of that, are personal credit checks and report scores needed or required to be a part of the process?
No, for the as of now, no. There's nothing in the rules or regs saying that they're going to propose to do any personal credit checks. The investors themselves will, if you're an accredited investor, you do have to, you do go through a check for that. But unaccredited investors, as of now, they haven't said what they're going to be doing to verify those dollar amounts.
Question from. Just going through, we've got lots of really great questions. Again, if you have a question, you can feel free to put it in the chat menu. A question, do investors, are they anticipating a return on investment for their money that they pay in?
Yeah, so equity crowdfunding is different than rewards or donation-based. Crowdfunding that is currently available. Rewards and donation based is usually like they're either donating or they're expecting a reward, like you've got 5 free coffees or something like that. Equity crowdfunding really is someone putting in money and expecting the money to return at a percentage. Now, that percentage will differ depending on the investor of what they're looking to do. You know, angel investors tend to ask for lower return than if you look at VC investors, only because of the stage where the company is. So definitely investors will be looking at this to increase their wealth, and so therefore they're looking for for a return on their investment.
We have a couple questions, both from Kevin and somebody else too as well, about foreign companies wishing to make use of crowdfunding here in the United States. Is that available to foreign companies that are doing business here?
So the same rules that apply today for SEC for foreign listed companies would apply during the crowdfunding. So that's a different section of the SEC code, but nothing else is changing from a foreign perspective. So if they're able to list today and offer in this country, they should be able to also take advantage of the crowdfunding platform as well.
Great. This is, I think, an appropriate question from Shirley. How will the women business owner receive special preference in crowdfunding arena, if at all?
As of now, there's no proposal for women-led businesses to have a preferential treatment. What we're trying to do is educate women and the small business owners on how to prepare for you to be unique selling point on the platform. You know, there's probably some things that your business does that is very uniquely situated, and how do you highlight that is where it is. But as of now, just getting the actual crowdfunding rules out so that they can be available is the #1 priority for the SEC.
And I would just add that as Carla mentioned in her opening remarks, it is kind of happening organically, that a large percentage of women are engaging in the crowdfunding space. So we do kind of expect that to continue in the equity crowdfunding space like it has been thus far on other crowdfunding platforms.
And then do you see any kind of advantage as well, I guess this is an open question for the panel, like of being of a certified woman business-owned company, like beyond for crowdfunding or for other benefits that people might see in terms of using their services?
I would say being a certified women-owned small business can only help you. And the reason I say this is if the government is your contract client, getting funding to do government contracts, you know, through a crowdfunding platform would work really well. That means you are certified to be able to go ahead and win contracts that other people aren't able to at this moment. So I think any certification that sets you apart and makes you different is always helpful because it only adds to your value proposition.
Yeah, and Pravina, let me add to that. This is Carla Harris. I could not agree more. And the other thing is, as we talked about at the outset, it raises your level of visibility, and there are investors who are specifically looking for businesses that are started or led by women. And you might not, in an ordinary course of business, especially under today's environment, have access to that kind of investor. And the fact that you have access to a crowdfunding platform raises your level of visibility so you can find them and they can find you. And I also have my colleagues Amanda Brown and Crystal Glass on the phone if there's anything that they'd like to add to that point. But I would absolutely, as Pravina said at the outset, when you are marketing your materials, any kind of key certifications that distinguish you like that, I would certainly make sure I make that a part of my marketing presentation.
Yeah, thank you. Question from Daryl. Do we have any idea on how long it would take to get approved after submitting the application for fundraising?
As of now, no, because we're still waiting out for the rules, and they haven't put out timetables and things like that yet.
Yeah, so once we get the rules in 2015, once they're finalized, we'll have a much clearer picture on timetables for individual companies getting approved. That's correct?
Yep. Yeah.
Great. I guess one question from Tammy is how extensive is the process to become certified? We talked a lot about the various requirements that people will have in terms of their needs, in terms of getting their documents prepared. If you could just touch a little bit more on that.
Sure. I'm assuming this person means certification to be a woman-owned small business. From the SBA point of view, we do have contracting programs where women can, and actually it's a self-certification where you go on to the SAM website and you put in your business and you click a box that says you're a woman-owned small business. And when that happens, when contract officers go and look at that, they'll actually ask you for your tax returns of the company and the owners and the directors to make sure it is really owned by a woman-owned small business. But it isn't an arduous process if you're, it's because it's a self-certification, but you need to have records showing, who owns the business, what do they do, to prove out that you really are a woman-owned small business. And we also have an 8A certification program, which you can find on SBA.gov. Both these programs, that's a little bit more of a process because it goes through a questionnaire as well as documentation on the company to certify that business is not only a small disadvantaged business and needs help through that program as well. And that's all can be found on SBA.gov. And both of those programs, we have people out in the field in your hometown, hopefully, who can help you go through those certification processes.
Great, thank you. Here's another question from Charles. After a business embarks on crowdfunding, is the SBA planning on offering any specialized support for those companies as they are embarking on in the process of crowdfunding?
Yeah, I mean, we are going to be, at this point, we're, as we said, in the process of kind of just watching the rules process to see how it unfolds. But in the meantime, we are directly connected with the folks at SEC that are doing outreach, and we're kind of developing an outreach and education strategy so that as soon as the rules are final, we're kind of ready to go. But we'll be working on kind of dispatching information to our field offices around the country, as well as we mentioned, the SCORE centers and SBDCs and women's business centers. So we're going to be working closely with the SEC and all of those resource partners to make sure that there's a lot of information out there and whatever training you might need in order to prepare for the different requirements.
Great, and I imagine we'll be doing quite a few webinars as those requirements get finalized as well. And what are, if you could also just like as a follow-up to that, touch on some of the other resources that the Small Business Administration offers to small businesses, not only with respect to crowdfunding, but an overview of some of the other resources that you offer. We're getting a couple questions about that.
Well, we've hit upon a bunch of our resources that are out in the states, outside of DC. Our general sort of buckets of activity are in providing access to capital, in working with government contracting, in providing counseling via those resource partners that we discussed, and we also do disaster assistance in the case of sort of the worst case scenarios. So generally speaking, we're doing a number of activities that include the backing of loans from banks, as well as ensuring that a percentage of government contracts are going to small businesses. There's a lot more detail that could be gotten into there, but those are sort of the overarching activities that are happening at the agency. In our office, the Office of Investment and Innovation, we are working with small business investment companies. We also work on a program called SBIR, or the Small Business Innovation Research Program, or Small Business Technology Transfer Program. And these are grant programs that provide non-dilutive funding to small companies that are doing research and development for government contracts.
And then and the SBIC program, Pravina, is a small business investment company which does private equity for small businesses. So we invest in funds that will then further on invest into small businesses, as opposed to our traditional loan programs, which go from anywhere from our microloan programs, which are sub $100,000, to our large loan programs like 504 and 7A, which do about $5 million, or up to a maximum of $5 million. And all of it can be found on SBA.gov.
SBA.gov, that's the website of the day. We've got just a couple more questions, and then we'll wrap up. Question from Sue: will small company need to disclose other crowdfunding, such as non-equity crowdfunding, and transitioning to equity crowdfunding?
Most likely, on your financial statements, you'll have to be putting on how you get some of your funding. So it will be on there, especially if you do debt crowdfunding. They'll be looking at that just to understand the portfolio of who's involved in your company.
Great. Do you repeat the grant programs? Linda's looking for more information. She says, could you repeat the grant programs for research?
Sure.
That's okay.
Sure, no problem. It's Small Business Innovation Research and Small Technology Transfer Research, and that's actually a different website. You can find it on SBA.gov, but we also have SBIR.gov, which will give you information about the different agencies. There are 11 federal agencies which look to have small businesses do their research and development needs, and they have open solicitations which invite small businesses to come and get the money. They do it in 2 phases. Phase 1 is $150,000 or less grant, and Phase 2 is a $2 million or less grant, or $1.5 million, or less grant. So you could altogether get $3.25 million together with that program, but it is to provide research and development needs for the federal government, and you can find all the information on SBIR.gov.
Great. And we will send out a list in the follow-up of some of these resources to people in addition to the presentation. Well, I think we got through just about all the questions. If for some reason there was a question that was not asked, feel free to email it to info@businessfwd.org. You could just reply to the email that you received as well, email invitation, and I will be sure to pass that along to Kim, Pravina, or even Carla Harris. So thank you, Carla, Kim, and Pravina, so much for joining us today. This was incredibly informative, and we'll look forward to further presentations from you all in the future. And thank you also to everyone who tuned in today and participated, for taking time out of your busy day to learn more about crowdfunding, especially as it applies to and can benefit women-led businesses. Again, this presentation will be available after. We'll email it out as part of a follow-up. And also, in just a short second, there will be a short evaluation. If you could fill that out and let us know how we did, because we're always trying to make our presentations more effective and making sure that you are receiving the information that you'd like. So again, thank you, women, so much for taking time out of your day, and we hope to talk to you soon. Thank you.
Thank you, Shamway.
Thank you.
Thank you.